Well, best ever listeners, how you doing? Welcome to the best ever multifamily syndication show. What's today, Chris Parrinello? How you doing, Chris?
Doing great. Thanks for having me, Joe.
Well, I'm glad to hear it, and it's our pleasure. Chris is the Vice President of Investor Relations at Viking Capital. I know those guys over at Viking Capital. I told Chris to tell Vic and Ravi I said hi. I've known them for a while, many years. I don't know, almost, not 10, but closer to 10 than 5, I think. Um, But for anyone who doesn't know about Viking Capital, Chris, you want to give the best ever listeners a little bit more about your background, your focus, and then also, what Viking Capital does?
Yeah, absolutely. So my background has been in real estate private equity for a little over a decade. I started my career in China and then quickly to LA, focusing on hotel development, and then transitioned in 2016, 2017 into multifamily. Worked for a few other real estate sponsors like Viking, primarily focused on institutional capital, but really enjoyed transitioning into Viking, where I've been for 3 years, and taking some of that institutional thought processes to traditional smaller LPs. And Viking Capital started in 2015. We've done just over $1 billion of acquisitions to date. Um, we have 18 active projects, and our active AOM is right around 850 million, 860 million.
Nice. And about how many investors have invested with you?
Yeah, so we have just over 1,000 active LPs.
That's a large database for the investor relations team. Who is on the team on the investor relations side?
Yeah, so we've scaled it. This is one of the things that I really wanted to bring to Viking when I came in. So when I originally came to Viking, we had just under over 300 LPs. And the goal was to kind of build out this framework. My approach is always to hire younger folks, mentor them, bring them up. So when I was on, it was just me and one other associate. Today we have 5 people in the IR team. We have someone that focuses on investor services, someone that focuses on investor, really the sales process, talking to prospects, and then each one has a couple of people and interns below them that are still growing and building their knowledge when it comes to real estate.
All right, let me make sure I understand that. You have one person on the sales side, so meeting with prospective investors, right?
Correct.
Okay, and then you have one person on investor services side, so helping with K1 questions, helping get the
Portable.
paperwork to the
Yeah.
finish line. And then I was a little unclear about the other three people.
Yeah. So I'd say we kind of separated it out into services and sales. Um,
Okay.
those two folks that I mentioned are kind of the management of those two verticals. So then the
Okay.
sales side has one other gentleman that's an associate, and an intern, and then the services side has an intern.
Got it. And then the fifth person is you.
Right. And the goal would be
Okay.
that the interns grow, and eventually become associates as our company scales and as they learn and kind of prove their value.
Okay. Where is your involvement with this team? So you've got one person who heads up sales, so prospective investors. You have one person on investor services who heads up the. Well, actually, I'd like, if you wouldn't mind, would you explain what the investor services person does and what they wouldn't do?
Yeah. So investor services has multifunction. So in one role, when they have extra time, they're going to be the nurturer, the person that's always available. So part of their role is quarterbacking any questions that come in through our investor base. So that might be a sales question, or it might be something that's more data relevant. I'd like a copy of the pitch deck or the recording that you guys did on your last webinar. That would be done by services. In addition to that, they're planning the quarterly meetups with investors. It might be a portfolio review or helping people make sure that if they have feedback that it's getting to our team and that we're building it into our systems and procedures. So we actually, the role that has become investor services, we originally called that investor concierge. And it was just someone being available at all times that would be able to be responsive to an investor. So if someone wanted to reach out, there were no gaps. The sales side of investor relations, I wouldn't say it's necessarily sales. We're not treating this like we're selling widgets. It's more of investment education, someone that's walking through a pro forma, helping people understand the terminology, understand how to evaluate risk. And that takes a really high level of knowledge of how these deals work. So that's where their focus is on. When we have a webinar, having someone that's going to be able to do a pro forma review and basically go through all of the numbers or answer all of the questions and build our FAQ to get out to investors. So we want to make sure that between the two sides of investor relations, that investors are not only getting access to the deals and hearing the highlights, but that they're actually understanding how the deals work and making sure that their risk profile matches what we believe the risk profile is of the investment.
Got it. Okay. That's helpful. So you've got investment education / sales, basically prospective investors.
Correct.
And then you've got current investors. So for prospective investors, you have someone who heads that up. And then is the associate also an intern, or are those two separate people?
No, so he is actually the proof of concept that interns will, given enough time, become associates. So he started out as an intern while he was in college, finishing up his finance degree. 6 months unpaid internship, did a really good job of growing and learning how things work. And then he was rewarded with a full-time role when he graduated college.
Okay. And so you, in addition to him, you also have an intern in that department?
Yeah, the next iteration of his process is another intern that is working through understanding. A lot of times what they're really working on is kind of back end research, market research, any side projects. In many cases, when you hire an intern, you're going to spend a lot of time developing them. So it isn't necessarily like you're getting a bunch of free labor, because you're pouring effort into them. And the goal is that when you're done, they could be a really great hire for you that understands your systems and procedures. And there isn't going to be this huge onboarding by hiring an expensive associate that maybe has 10 years of experience. But if it doesn't work out for them to work with you, they can take the knowledge that you've given and go find a job at a company that does have a need for a hire.
Sure. Okay. So we have one department that has 3 people and another department that has 2 people, right?
That's correct.
Okay. And so for 1,000 investors, you have a full-time person and an intern. So 1,000 active investors. That's interesting for other syndicators who are looking to scale up to that level. Yeah. That you're able to manage 1,000 investors with one full-time person and an intern. Can you elaborate on that?
Yeah, and I'd say for folks that are looking to kind of emulate and know how to scale want to understand how to scale their team, the way I approached it was when I came in and we had 300 LPs. What I told Vic and Ravi was, look, you're hiring me and I have a lot of experience. I'm going to roll up my sleeves and I'm going to do everything myself. We also at that point didn't have a marketing department. It was all IR. It all fell on my shoulders. Like once I design the system, once we build out the SOPs and everything's working right, then we will hire as needed and scale up to what we actually need so we're not bloated. And that's been really, really successful. So my idea is that if I hire out and I hire an employee that maybe, not to say that you wouldn't want to hire somebody that has 10 years of experience, but when you hire somebody that has a lot of experience and is fully polished, a couple of things tend to reveal themselves. They don't do things exactly like you do, and you have to kind of build them into your system. And it becomes really expensive and taxing on the payroll to hire the brightest and best at every step of the way, even on the lower end of your departments. So I would say after year one, when we scaled up from 300 investors to 450 or 500 investors, that's when we needed to add support for myself. And ultimately, what every single person on the team, their one of their main goals is pulling responsibilities from the person above them and creating more time for the person above them to have a higher and best use. So for me, my highest and best use as Viking transitions into more properties, more AUM, is I'm focused on folks that are writing checks of $1 million or more typically. Family offices, RIAs, smaller institutions. That's what my background lent itself to. But what I was able to bring to Viking before it was ready for those relationships was structuring the system for the many investors that we had and training and mentoring the younger people on the team. So that still happens. But my goal with Amir Nassar, who is my number 2, was, look, you've been with me for 3 years. In that time, I've created the ability for you to be able to do about 75% of what I can do. There's still some things that you need to learn from me, and you're going to get that mentorship. But my goal with the intern is that you should be able to, at this point, give that person 75% of what you can now do. And you build this chain of real estate professionals. And this is traditionally how real estate companies have operated for 50 years. Like when I was getting brought up in Southern California, the CEO of our company was a well-known Larry Cosmont in Southern California, economic advisor, works with cities in the States. For 8 years, sitting in the boardroom, listening to him talk, listening to him structure deals, how he mitigated against risk. That's how I learned. And I wanted to create that system within Viking. And now we have that in every department. So not only IR is structured this way, but acquisitions. Judah Fold has an analyst that he's training and bringing up through the world. Same thing in asset management. Ed Monarchik has Charity, who is a junior asset manager that's learning the ropes from doing a lot of the heavy lifting and monotonous things, but also being able to get mentorship down from the person that's leading that department.
Let's talk about investor sentiment.
Sure.
Where is that from your experience right now? LP sentiment, where is that from your experience right now?
Yeah, I would say that it's dual folded. So I think you wouldn't be surprised that over the last few years, the market has, faced challenges and adversity. So this has been one of our core focuses over the last 12 to 24 months is not everything that we underwrote and not everything that we projected has come to fruition. And a lot of that has to do with things that were out of our control. And some of it has things to do with things that were in our control, like our forecasting and our underwriting, where we thought we were being conservative. Commercial real estate went into some pretty crazy headwinds with interest rates, with softness in rents in major markets, and kind of an overheating that was a little bit worse than we anticipated. So we've had properties that have underperformed. We've recently had to do our version of a capital call, but had to have the hard conversations where you go to an investor and let them know that not only have distributions stopped, but there's going to be some level of support that needs to happen with the property in order to transition it into the safety that we hope to protect principal and get it into the future. I think any real estate person that has operated for the last 10, 15 years, especially the last 4 or 5 years, that pretends that there was no adversity and then it's just easy and anyone can do it is just plain lying. But the focus for Viking and what I really wanted to champion with Vic and Ravi was there's going to be times where we either forecast wrong or the market doesn't go the way we thought it was going to go. And what we want our investors to hear, and when we have those calls with them, it's less about increasing their sentiment, and it's more about finding an opportunity to rebuild trust. So finding a way for us to further align with them, whether that's like one of the things that we built into our program was a class that if there was an investor that was in a deal that was facing some major adversity that we didn't plan for, pause distributions, capital call, that on new investments that they make with us, there's a special class for them where they're getting a 90-10 split and an 8% pref. And there isn't a minimum because at this point, we're just trying to get an opportunity to get them into a deal in a better environment at a better basis and create a better experience for them. So taking accountability through Viking sharing some of its profits and it not being a $500,000 minimum or $1 million minimum to get those economics. Things like that allow us to build alignment. And then the conversation with the investor always has to be, we're taking accountability for what we get wrong, but we're also being very transparent about what we got wrong. And part of our philosophy is that if we're going to be around for the next 20 or 30 years, that we're going to learn from our mistakes. We're not going to continue making the same mistakes over and over and over again. And through that, the opportunity to build trust back with the investors we'll lose some. Some are going to feel like the properties didn't perform. They're going to put their money elsewhere. And I think that's fair. The ones that we have really strong relationships with that say, no, we get it. And we appreciate you being honest with us. We do want to take advantage of the extra economics. And, we're in this for the long haul with people that we trust. Real estate's always been a relationship business. And I don't think it's any different today.
Thank you for sharing that. And certainly that thought process and those challenges are, as you mentioned, not unique to Viking, and that thought process can be helpful for others who are going through similar situations. What type of ways are you getting new investors right now?
I'd say the majority of our new investors come from referrals and organic marketing. We always have paid marketing and advertising that's a part of the way that we do daily business. But what we found is new leads coming into the system are going to take 3 to 6 months. They need to understand how the deals work. They need to understand how everything operates, who Viking is. So we never count on paid marketing to fill our deals. At this point, with 1,000 LPs, and I'd say maybe 50 to 100 of those LPs are like significant large check writers. So
how do you define that?
I would say $500,000 or more in a single check is their capabilities. Sometimes it's much more. Sometimes it's less based off of their liquidity and what they're looking to do, or if the property is the right fit for them. But our goal is always to grow our investor base, not by paying for leads, but by creating education and information where people are attracted to us and want to learn how everything's structured. Usually, that takes time. And I'd say that was what really started to occur after we built in our in-house marketing department. So when I came onto Viking, it was structured the opposite way. So we had an agency, and we hired the agency to get us leads. And then the leads that came in, we would try to help them understand Viking, see if they were a good fit. They would enter our system, and then we'd have our investor base that we already knew that would invest in deals. Once we built out the marketing team and actually had organic marketing where we were putting a blog out every week, we were putting out white papers. We have a podcast now. We have lots of things that will attract people's interest. And really what it is it's a way to build trust. So if you can communicate with new people, you're not necessarily asking them to come to Viking and invest. You're saying, we have knowledge about this and we want to share it with the world. And the people that follow that information eventually say, well, I'd also like to learn about your investment opportunities. And, if you're authentic and you really build good relationships with the people that trust you for information, it usually leads to growing your investor base.
You've been with Viking for 3 years?
3 years, just over.
3 years. Okay. How has 3 years ago, if you were having a conversation with a prospective investor versus today, how has that conversation evolved? Whether it's questions you ask, your approach, whatever. But I just want to leave that an open-ended question here. What comes to mind?
Yeah, I feel like my approach hasn't changed much, but I feel like when I came into Viking, coming from the previous place that I was the director of capital markets, I kind of went against the grain as to way the market for groups that worked with retail investors operated. So from the very beginning looked at this and said, there needs to be more substance than marketing. Like, we have to talk about risk. We have to talk about how everything works. And in that time, a lot of deals were doing really well. We're talking about January of 2022. So they weren't always going to do well, but with interest rates where there were, with pretty crazy cap rate compression, where you were seeing deals trade at lower cap rates and lower cap rates month after month, a lot of people, I think, in the industry felt like that would never end. And I think in some respects, Viking from 2020 to 2022 had some of that, like built things in to protect themselves, rate caps, things like that. But everyone was very excited about multifamily. And when I came into the team, I was very much like, there's still a lot of risk here, and investors need to understand that. And I think that's one of the reasons why we've been able to continue to operate, is a lot of the investors that hadn't talked to me prior had reset expectations then. And then a lot of the investors that were like, man, this isn't going the way we thought it was, were like, but you know what, Chris? Like, when we talked to you, you told us that cash flow wasn't guaranteed, and that you could run into headwinds and it could affect revenue, and that this was all based off of excess cash flow at the deal. So I think that we've leaned further into that because now investors are very much aware. So the days of an LP not asking about a debt structure or not asking about, the exit cap rate, I think people have went through enough adversity to where they have self-educated, and I've always made that a focus. So it's been business as usual, but now we've further focused into that, and we talk about it. I think it's important for the sponsor, whether it's my department or Vic and Ravi or someone under me, when you're talking to an investor, help them understand what could go wrong. And it really makes the difference between somebody being loyal and working with you through the adversity or not.
What's something from an investor relations standpoint we haven't talked about yet that you think we should?
We talked about scaling teams. We talked about like a really big focus on risk. I would say one thing that I think any sponsor that's looking to grow and scale, and they want to build an investor relations team and find the right people to operate that, is, in addition to the things we've already mentioned, someone that will research and study and understands the micro and macro trends of an industry. So understanding how supply could affect 4, 5, 6 years down the road. Understanding, someone that, I think it's important to have someone in this seat, in my seat, that can sit down at the investment committee when you're looking to buy a property and really advocate for the investors and understand, the 10, 15-year outlook of where things could go, or at least where the expert real estate people think things will go. No one has a crystal ball, but you don't want to have someone in this seat that is going to run the program like you're selling cars or selling anything. You want it to be investment education, and you want it to be based in fundamental macro trends for real estate, and be able to express that to the investors, because ultimately that is what's going to mean success for the sponsors, being able to be right on those trends more times than not.
What are some ways, specific resources or tools that you use to stay on top of the micro and macro level trends in multifamily?
Yeah, I would say reading, research, just being a sponge.
Specifically, though, like what sources?
Yeah, I would say people that I trust in the industry, and I have a high level of skepticism from any one source. No one really has the answer, but someone like Peter Linneman, who really set up a lot of the real estate education at Wharton. He does a really great podcast with Willie Walker. And you really have to understand where the information is coming from. But like all the big brokerage houses, CBRE, Marcus and Millichap, they put out reporting quarterly, and they have the breadth of AUM and unit size and different parts of the transaction to where their market research is really quality, you still have to have a veil of common sense and say who's putting this information out, because brokers are going to broker, right? But listening to other sponsors, you'll get a lot from watching CNBC, not necessarily the people that are talking about what's happening, but listening to the Fed chair, Jerome Powell, speak, learning about how the Fed works, what the levers are, why they would increase the federal funds rate or not increase the federal funds rate. So it takes deep research. It's not something that you can just watch one podcast overnight and be like, okay, I'm an expert. But if you holistically look at the market and the different players and what they're saying, and the data that isn't changeable. Like if you look at data on how many multifamily starts are happening and how many are going to be completed in a certain area, that's going to give you a good idea of what kind of supply is going to be in the market in the given years. I think that's one of the unique opportunities we have right now is people look back at 22 and say interest rates were the only problem. And maybe there's some truth to that. But the reality is, because there were low interest rates, you had a ton of supply being created. So you had a convergence of interest rates shooting up and historic supply coming online. You can't necessarily have it both ways. Once interest rates shot up and that supply is now getting absorbed, you don't have a lot of supply coming online in the future. So it's not obvious, but you understand that there's going to be some time in the future where the supply demand imbalance is actually on the other side of that, because it always finds a way to get back to equilibrium. These are all cycles.
What tools, back to your IR team?
Yeah.
What specific tools do you all use? From a database, what software, from recording calls, what software, if any, just what are some 4 or 5 tools that you use?
Yeah, I can break down our tech stack. So, and we've tried many of them, and I'm sure, as you know, there's no one perfect solution. So what we have finally landed on is we use InvestNext for our backend system. We really like them. It's not perfect, but what I can say about their team is, just like our investors expect from us, they're transparent. When their product doesn't do something that we need, you bring it up, and miraculously 3 months later, they've built something into their code that addressed our feedback. So that has built a lot of trust with us. So I think that's the biggest tech tool we use. We tried HubSpot and Salesforce. It wasn't for us. It was a little bit too big and onerous to maintain. So we've gone with Go High Level, as it's really a marketing CRM. It's very inexpensive. So for groups out there that want a low cost CRM that doesn't take an IT department in your company to maintain, Go High Level was really solid for us, and our marketing team really manages those efforts. And that pipeline management is important. Task management, we use software called Monday. Very customizable, very similar to Go High Level. It's not very expensive, but it helps make sure that everyone's on task. For recording calls, we tend to use Fathom. Fathom does a really good job of giving transcripts, and it allows me to do my bi-weekly sales coachings and trainings where we actually dissect calls. We talk about how you could have provided more value to an investor or answered a question better. I think that's really important for any IR team to watch tape. Just like if you were an athlete and you were playing a sport, you always can get better. And the only way you can get better is if you're watching what you've done. That pretty much sums up most of the tech that we use, at least in the IR department.
That's helpful. Thank you. The portal is InvestNext. Go High Level is your marketing CRM. Monday, is that MUNDAY or?
Yeah, like the daily.
MONDAY. All right. Monday is task management. And what did you say, Phantom or Fathom?
Fathom.
Fathom is
right. It's like a little AI bot that will basically join any one of your Zoom calls. And what we didn't like was there's some digital dialers that will record a call, but we found that those were very invasive. So if you're doing a call and it happens to not be a Zoom call, even though that's our preferred method, you can still just put your phone on speakerphone and let the Fathom record it so you have a transcript.
How can the best ever listeners learn more about what you're doing and what Viking Capital's up to?
Yeah, I'd say, vikingcapllc.com, come to our website, tons of resources there. You can reach out to me directly, or my team. We have a podcast that we do. It's called Wealth Unfiltered. It wasn't really a Viking podcast. It's more a podcast that talks about all different types of investing, with a edge to real estate, but we cover everything. Those are the best ways.
Chris, this has been great. You covered a whole lot in a short period of time. The tech stack. I was saying, what tools do you use? You're like, oh, you mean a tech stack? Much better way to ask the question. Thank you for that. Yes, your tech stack. You covered the tech stack that your IR team uses. You covered the structure that your IR team has, and you currently have about 1,000 active investors. So the listeners can have some context for, okay, this is the team, the 5-person team, not including you, with 2 of those 5 people being interns. You covered the conversation with investors about deals that haven't gone according to plan, the approach that you take and the team takes with those conversations, and we covered a lot. And I'm grateful for this conversation and grateful for you sharing your insights, because anyone who has investors will get value from this conversation. It will be a little like a buffet at an all-you-can-eat. You might not want the broccoli, but man, this asparagus looks really good. Or who am I kidding? It's going to be the chocolate fondue that everyone wants. So screw vegetables, right? No, I love my broccoli. This has been very helpful. Thank you for sharing your insights, and thank you for the conversation. And I hope you have the best ever day, and talk to you again soon.
Thanks, Joe. Yeah, and I think the impetus of the show, we feel like sharing this data, internal data about how we operate. If it makes the industry better and people can learn from it, I implore any group that's raising capital or has investors, if they have questions, if they've found anything of value, reach out to me. We're always willing to help people, learn best practices and get better. I truly appreciate you having me on the show, and we'll see you soon.
Rising tide lifts all boats, right?
That's right.
That's right. Thanks, Chris.
Thanks, Joe.